Hello Chartered, we are here for revision of CF and LFR Indies. Myself Dipesh sir and I am from JK Shah classes. So these videos are brought to you by JK Shah classes. Now Chartered, we are here to discuss Indies 23 which deals with borrowing cost. Correct, you can see notes in front of you. These notes cover extensively all theoretical as well as practical aspects, how to solve the question and how to cater to the theoretical questions. Now in these notes there are some short form used, so I would request you to carry a pen or pencil before viewing this lecture. So if for those short forms you can write down the full forms because of space constraint. Anyway, let's start with borrowing cost. Now Chartered, as soon as you hear the word borrowing cost, what is the first thing that clicks you? Sir, borrowing cost, as soon as we hear, the first thing that clicks is interest. Exactly. So this standard deals with interest. Which interest? Interest received or interest paid? Sir, borrowing cost means it is interest paid. On what we pay interest? Sir, borrowings. Borrowings means basically loan, correct? So this standard basically deals with calculation, that is measurement of interest and treatment of interest. Am I clear? But this standard has described the definition of borrowing cost also. Am I clear? So basically we have divided this standard into three parts. First part is what is borrowing cost. Second, treatment of borrowing cost. Third is calculation of borrowing cost. Calculation of borrowing cost mein we have again three parts. One is foreign borrowings, one is Indian borrowings but specific in nature. Third is Indian borrowings but general in nature. Am I clear? So Chartered, what is borrowings? Borrowings as per the standard. Borrowing cost as per the standard is three things. Number one, borrowings, interest on borrowed funds calculated at the rate of effective rate of interest, which we studied in Ind AS 109, that is financial instruments. Effective rate of interest. Am I clear? So borrowing cost is nothing but interest on borrowed funds calculated at the rate of EIR. EIR means effective interest rate as per Ind AS 109. Second is forex loss up to a specified limit. Sir, forex loss up to a specified limit. First one to be understood, it is nothing but interest on borrowed funds. Second is forex loss up to a specified limit. That means, Chartered, suppose I have taken a loan from abroad. So on that I will pay interest. That interest ka treatment to this standard will cover. But that forex loss, some people argue that forex loss is also interest only. So that uska treatment bhi discuss karna chahiye. Treatment of that forex loss is also discussed. Am I clear? So standard gives us that a part of that forex loss can also be capitalized. What part we'll study in little detail later on. So in case of forex loss, interest on foreign borrowings is to be capitalized or not to be capitalized, we'll discuss. But forex loss ka certain part can also be capitalized. Third is lease charge on leased asset. That is interest which we pay on lease, but that is covered by a separate standard which is covered in Ind AS 116. So basically we are covering two things over here. Interest on borrowed funds calculated at EIR as per Ind AS 109 and forex loss up to a specified limit. Now Chartered, what does funds mean? Borrowed fund means borrowed funds includes all kinds of loan, which you can see over here. Borrowed funds includes all kinds of loan, bank overdraft, debenture, redeemable preference share. In case of compound financial instruments, if the principal portion is a financial liability. Am I clear? So compound financial instrument ka only the financial liability part. Am I clear? Because compound financial instrument consists of two things. One is equity, one is liability. We'll first calculate the liability, and on that liability part, whatever is the interest element, that is borrowing cost. Am I clear? It does not include any financial instrument classified as equity. So equity is not considered as a part of borrowing cost. So borrowing cost includes any sort of debt or loan, whether short term or long term. Loan, bank OD, debentures, redeemable preference shares. Redeemable preference shares means those preference shares which we are going to settle in cash. Those preference shares which will be settled in equity is classified as equity in Ind AS. If you remember, we studied that in financial instruments. And if it's a compound financial instruments, we consider interest only on the liability part. Now charted this borrowed funds. So you understood the meaning of funds. Interest on borrowed funds is a borrowing cost. Funds are what? That includes this. Funds should be used also for a specific purpose. That is, funds should be used for construction, acquisition or production of a qualifying asset. Understand? Funds should be used for construction, acquisition or production of a qualifying asset. Construction means construction of plant and machinery, building, anything. Acquisition means buying the asset till the time it is ready to use, and production, if we are into if it is inventory, we use the word production. If it is non-inventory, we use the word construction. Sir, that means you are trying to say this standard covers interest on inventory also? Yes, a part of it. Am I clear? So borrowed funds should be used for construction, acquisition or production of qualifying assets. So immediate doubt arises, what is qualifying assets? I am sure you have studied this in your Inter also, that qualifying assets are those assets which normally take substantial period of time to be in ready to use condition. Am I clear? Qualifying assets means those assets which normally take substantial period of time to be in ready to use condition for its intended use. Am I clear? Or sale. Assets which normally take substantial period of time to be in ready to use condition for their intended use or sale. Sir, sale, yes, if it is inventory, or we do construction contract, maybe construct a property for the purpose of selling. Or we are a builder, we construct a property for the purpose of selling. So intended use might be, when we construct any asset, it might be for their personal use, for the office use and for the purpose of sale. Now charted, what is substantial period? Substantial period is decided by the management. Substantial period is decided by the management. Now suppose management decides substantial period to be 12 months. So if any asset normally takes 12 months or more to be in ready to use condition for its intended use or sale, then such asset is known as qualifying asset. I repeat, any asset which takes normally the substantial period to be in ready to use condition for its intended use or sale. Substantial period is decided by the management. Suppose management decides that substantial period is 12 months. Suppose the management decides the substantial period is 12 months. Then charted, any asset which takes 12 months or more to be in ready to use condition, such asset is treated as qualifying asset. Am I clear? Again, I have underlined the word normally, for which I have given an example also. Suppose management decides 12 months as substantial period, and asset normally takes 10 months to get in ready to use condition. RTU is ready to use condition. But the asset takes 15 months to get in ready to use condition. It is not a qualifying asset because normally it takes 10 months. That is less than substantial period. Okay. Understood, sir. That means if the management has decided 8 months to be substantial period, an asset which normally takes 7 months to be in ready to use condition, then such asset is not a qualifying asset. Correct? Correct. Now, but that asset takes 10 months to be in ready to use. Will it be considered qualifying asset? No. Normally, how much time does it take to be in ready to use condition? Now, qualifying asset does not include assets which are measured at fair value. Why it does not include? Because it is in ready to use condition, that is biological assets. Inventories which are manufactured in large quantities, example, wine is not a qualifying asset because it is measured in large quantities, so it is difficult to allocate interest to each unit. The interest is allocated to the batch. Am I clear? Over here we are trying to find out borrowing cost to be capitalized to each unit of the asset. So in case of large quantity, it is not possible to find out borrowing cost attributable to each unit of wine bottle. But if you are producing aircrafts are not produced in large batches. It is produced 1:1. So, but in aircraft is a qualifying asset. Am I clear? So if you are considering inventory, whether it's a qualifying asset or not, so first you will check the substantial period. But after checking the substantial period, you will check whether it is manufactured in mass or it is manufactured on individual basis. If it is manufactured in mass, then those assets are not considered as qualifying asset for this standard. But if those assets are manufactured on one-to-one, one-by-one basis, then such inventory shall also be considered as a qualifying asset. Example, aircraft which is not produced in batches, it is produced one after the other. Am I clear, charted? Yes. Financial assets are also not considered. Why? Because they are always in ready to use condition. So qualifying asset will never include three things. Number one, those assets which are measured at fair value. Number two, inventories which are measured, which are produced in masses or in batches. But it considers those inventories which are manufactured on individual basis. That means you can allocate the cost of interest to one particular unit of inventory. Third, financial assets will never be considered as qualifying assets. Why? Because financial assets are always in ready to use condition, like debtors, investments. Whenever you invest money in that asset is ready to use from the moment you invest the money. Am I clear? So financial assets are out of purview of this standard. So till now we understood what is borrowing cost. So let me just go through it. Borrowing cost include how many things? Three things. Number one, borrowed funds. Interest on borrowed funds calculated at EIR. Number two, forex loss up to a specified limit. Number three, lease charges. But lease charges is covered in Ind AS 116. Now, borrowed funds. Funds means what? Funds can be long-term or short-term, any loan taken except equity. That means any instrument which will be settled in equity in future is treated as equity today. Hence, equity shall not be treated as part of borrowed funds. Why, sir? Because equity the cost of equity is not considered as an interest cost. They get a part of profit. Correct? Because they are owners of the company. Correct, sir. Now, chartered, but the funds should also be used for acquisition, construction or production of qualifying asset. What is qualifying asset? Any asset which normally takes substantial period to be in ready to use condition for its intended use or sale, then such asset is treated as qualifying asset normally. So if the management has decided that the normal substantial period is 12 months. So any asset if takes more than 12 months, it's a qualifying asset. Any assets which takes normally less than 12 months, it is not a qualifying act. We are not interested in actual period of construction. We are interested in normal period of construction. If the normal period of construction is equal to substantial period or more than substantial period, then we say it qualifying asset. Now, chartered, one simple question should arise. Over here I told substantial period will be decided by the management. If management decides substantial period to be 12 months, then we take 12 months as base. Any asset which takes normally more than 12 months, qualifying assets. Any assets which normally takes less than 12 months, non-qualifying asset. But as a student or as a reader of this standard, I would become inquisitive to find out, sir, ये substantial period management decide कैसे करेगा? Now, I'll come back to this little later, that how will management, obviously management will take a help of a chartered accountant. So basically you are only supposed to decide what is substantial period. On what basis you should decide substantial period, that I'll come to it little later. But that is, I think, a point which should be discussed. How would a management decide what is substantial period? Anyways, now chartered. So now we understood what is borrowing cost, interest on borrowed funds. We understood the meaning of funds and where the funds should be used. Now the question arises, what to do with interest? What to do with this borrowing cost? It is stated that if the borrowing cost is incurred on the qualifying asset, capitalize borrowing cost till it becomes ready to use or sale. Am I clear? Borrowing cost on qualifying asset should be capitalized. That means interest should be transferred to asset. Other interest should be expensed to P&L. That means this standard tells it that a certain portion of, if the borrowing cost is incurred on qualifying asset, then such interest should be capitalized, else it should be transferred to P&L. Why like this? Jara sochte hain. There are two reasons for it. Reason number one. Logically, we think interest is a period cost, not a point cost. It is for a period. Correct? Suppose I am constructing this asset. This asset takes 2 years to construct. And I have taken loan to construct this asset. This asset will be in ready to use condition after 2 years. That means this asset will be able to generate revenue for me after 2 years. Correct, sir. I will generate revenue from this asset either by use or by sale. Yes, sir. But the construction period is how many years? 2 years. So for 2 years, I will keep on incurring the interest cost. Yes. And if I transfer the interest cost to PL, do I have this interest cost ka corresponding revenue? No. And when the revenue will start, will I have a corresponding interest cost? No. When the revenue will start, that means the asset is in ready to use condition. That means borrowing cost should not be capitalized. So when I was capitalizing the cost of construction, when I was capitalizing the interest cost for the construction period, that time revenue was not generated. When revenue was generated, interest cost on this construction was already transferred to PL. Don't you think it's a violation of matching concept? Haan, sir. Hence, to match the concept chartered, to have a matching concept proper, that cost should be matched with the revenue generated. Hence, what they are saying, that whatever borrowing cost you incur should not be transferred to P&L since its corresponding revenue is not coming. Corresponding revenue will come after 2 years. So 2 years ka interest you added to asset. So your asset value will increase. Yes. As soon as the asset value will increase, its depreciation will increase, and that increased depreciation will come into your P&L. Yes or no? That means, can I say interest cost which is capitalized will come back to P&L as depreciation when revenue is generated? Yes. And hence my matching concept will be satisfied? Yes, sir. So I hope you understood why the standard says that borrowing cost should be capitalized. Borrowing cost on qualifying asset should be capitalized because of matching concept. When the asset is in non-revenue generating position, that time ka interest cost should be added to the cost of the asset. So asset cost will increase. Asset cost will increase. That increased asset cost, because of borrowing cost capitalized, that increased borrowing cost ka depreciation will come in your P&L account debit side. So depreciation will include depreciation on interest also. Yes, sir. So suppose 100 rupees asset, 10 rupees interest. So asset became 110. When you are charging depreciation, you are charging 11 rupees. So 10 rupees is basically what? Cost. 1 rupee is what? That interest coming back to P&L, and that time the asset is generating revenue. Is this clear? So this was the reason the standard says that borrowing cost on qualifying asset should be capitalized. Now the question arises. Borrowing cost mein borrowing cost should be capitalized from which date to which date? So standard says there is a commencement date and there is a cessation date, that is start date and the end date. Start date may say, they say, let's logically think. Start date. Suppose I have loan taken loan is taken on 1/4, but construction started on 1/7. So obviously for these 3 months, am I paying interest? Yes. But should it be capitalized to the asset? No, sir. Why? Because the construction did not start only. Exactly. So I should not start chartered capitalization from the date of loan taken, but I should start capitalization from the date when construction started. Correct, sir. Now let us look at another situation. Suppose loan is taken on 1/7, but construction has started from 1/4. Will your argument still hold true that interest should be capitalized from the day construction started? No, sir, because when the construction started, loan was not there. If loan was not there, borrowing cost was not there. So if borrowing cost was not there, how can you capitalize the interest? So borrowing cost should be capitalized from the date loan is taken. Yes. Now, so if I ask you, tell me when the borrowing cost should be capitalized. So in the first case, it should be capitalized from 1/7. In second case also, it should be capitalized from 1/7. That means, can I conclude that borrowing cost should be capitalized on the later of loan taken or construction started, whichever is later? Yes, sir. Now the third element. Suppose construction started, but expenses on borrowing cost, this loan ka money I started using in the construction from 1st of August. Then capitalization should start from 1st of August. Exactly. That means it is very clearly stated in the statute that borrowing cost commencement should be loan taken or construction should start, active development of construction should start, or expenses incurred on the asset should start, whichever is later. Correct? Whichever is later charted. So over here it is given, if you see, commencement date is later of loan taken, expenses is incurred on the asset, or active development on asset has started. Active development means physical construction has started, not the paperwork. Okay. So if loan is taken earlier, but money is spent on loan later on. Suppose chartered have taken a loan on 1st of April, 5 lakh. 1st of April, I took a loan of 5 lakhs. 1st of May, I took a loan of 5 lakhs. Construction started on 1st of June. Out of this 5 lakhs, I started using the money in construction period from 1/7. Out of this 5 lakh, I started using money on construction period from 1/7. Then chartered loan. Commencement date should be 1/5, 1/6 or 1/7. Sir, 1/7. Why? Because you started using this money on construction on 1/7. So later of the three. Am I clear? Yes, sir. Now the question arises, chartered, when the cessation would end. When obviously either the loan is cessation period. चलो इसके लिए भी दिमाग लगाते हैं. Suppose chartered your construction got over on 1st of July 1990. Suppose the construction ended on 1/7/1990 and you repaid the loan on 1/10/1990. Construction ended, asset is in ready to use condition. Will you capitalize interest after that? No. Why? Because the asset is in revenue generating capacity. So you'll capitalize till the date asset is in ready to use condition. But chartered, if your construction, if you repaid the loan on 1/4, then obviously from 1/4/90 to 1/7/90, did you incur any borrowing cost? No. So shall interest for these three periods should be capitalized? No. So what to say? That capitalization should stop when loan is repaid or construction is done. Loan is repaid or construction is done, whichever is earlier. Am I clear? Yes or no? Now, so it is given over here. Cessation date. Cessation date is earlier of loan repaid or date when the asset gets ready for its intended use, whichever is earlier. So when you would start capitalizing, ekdam common sense, the date when you start using the money of loan on construction, when construction is taking its physical form. So loan taken, active development started, or expenses incurred on construction, all the three, whichever is later. So basically, when you started using loan money on active construction, when you would stop, when either you have repaid the loan or your construction is completed, then your capitalization would stop. But there is a point over here. What is that point charter? Note क्या है? If a construction of qualifying asset is constructed in parts, the construction of qualifying asset is completed in parts, then and each part is capable of being used independently. Then as soon as the part gets over, then the borrowing cost on that completed part should stop. Then the borrowing cost should be, suppose there are 5 floors. As soon as the first you will allocate the borrowing cost to all five, then one got completed. Borrowing cost on this you will not capitalize. Borrowing cost will capitalize on remaining 4. Then this got completed. Then you will capitalize borrowing cost on these 3. Then these 2 got completed. Then you will capitalize borrowing cost only on one remaining asset. Am I clear? इसके example I have given. Example, completion of hotel floor by floor and hospital wing by wing, hostel wing by wing, college में campus and the education facility. So when construction is in parts and each part can be used independently, then borrowing cost on the completed part should stop and borrowing cost should then be allocated only to the uncompleted parts or work in progress wala construction. Am I clear? Now, chartered, understand this thing. That is, suppose your borrowing cost starts from 1490 and ends on 31st March 93. So 90, 91, 91, 92, 92, 93. Ultimately, you are doing capitalizing borrowing cost for how many years? 3 years. Because borrowed funds were used on construction of a qualifying asset. Correct? And we are assuming that substantial period is less than 3 years. Fair enough? Yes. Now, chartered, एक बात देखो. Suppose due to some reason the construction was stopped for 3 months. Construction was stopped for 3 months. So these 3 months ka borrowing cost should be capitalized, should not be capitalized. Borrowing cost of these 3 months should be capitalized, should not be capitalized. Now let's apply logic. Suppose I had to stop the construction which was unavoidable in nature. I could not avoid that reason. For example, I am constructing a bridge and there is high water level. Can I continue the construction? No. There is heavy torrential rain. Can I continue the construction? No. There was a COVID attack. Government put a ban on construction. Is it within my hands? No. So if the stoppage is due to unavoidable reason, then chartered, you should continue capitalizing the borrowing cost in this 3 months also. Am I clear? Yes. But on the other hand, this 3 months ka construction was stopped, or the 3 months ka construction got delayed. The construction got delayed or the construction was stopped due to avoidable reasons. Now, promoter ka marriage, construction was stopped for 15 days. Then chartered Diwali, Chhat Puja, employees got a break. Again, construction stopped for 15 days. Then Holi came, construction stopped for 15 days. So in bits and pieces, construction stopped for 15 days, which were avoidable reasons. Or construction got extended for 3 months. Why? Because of laziness. Workers were supposed to work for 8 hours a day. They were only working for 6 hours a day and relaxing for another 2 hours. So these were avoidable reasons. So if avoidable reasons ke liye construction stops, then capitalization should also stop. Am I clear, chartered? Yes or no? So if during your construction period from commencement date to cessation date, if the construction stops in between, should you capitalize interest during that period or not? You have to check. If the construction has stopped due to unavoidable reasons, the reasons were not within the control of the entity, then you should continue capitalizing. But for avoidable reasons, then capitalization should stop for that period. Am I clear? I have given the examples and the notes over there. Yes or no? Yes, sir. Now, chartered era. That is known as suspension. So, you understood commencement, suspension and cessation, chartered. Now, chartered, we are getting into the unit how to calculate borrowing cost. So, borrowing cost ka initial fundamental which I wanted you to learn is what is borrowing cost? You understood. Treatment of borrowing cost, you understood. Why borrowing cost should be capitalized for matching concept, you understood. Now that doubt which I had created in your mind is still there. That's how management would decide substantial period. Now let us go to the spirit of this standard. The standard ka spirit is that if this asset takes more than substantial period, say for 2 years, then for 2 years, is it generating any revenue? No. If it is not generating any revenue, that means you are incurring the cost, but its revenue generating capacity is after 2 years. So instead of putting the cost without any corresponding revenue, you capitalize the cost, increase the cost. That increased cost would come by way of depreciation. So basically, the revenue generating capacity of the asset would start after how many months? 24 months. Revenue generating capacity of the asset would start after how many months? 24 months. So you should capitalize interest for 24 months. Correct? Now, suppose substantial period is 8 months. Asset normally takes 24 months to be ready. So are we supposed to capitalize for 16 months or 24 months? Full 24 months. Am I clear? Substantial period 8 months. Assets ready to use 24 months. So it's a qualifying asset because it takes more than normal period, more than substantial period. Normally it takes more than substantial period to be in ready to use condition. Correct? Now chartered ये 8 months decide कैसे किया management ने? The fundamental lies here. Why did we capitalize for after 2 years? Because its revenue generating capacity starts after 2 years. Normally, when you start a business chartered, there is a concept of you buy a raw material, so your funds are blocked. Correct? Then you buy a raw material, it becomes work in progress, it becomes finished good, it stays in your godown, then it goes to your debtor and it comes back to you. So the revenue generating capacity is nothing but your operating cycle. So normally every asset in your business keeps on generating revenue for you in one operating cycle. If any asset takes more than one operating cycle, then it's an asset. Correct. So this substantial period generally should be equal to operating cycle. And if you cannot determine that substantial period, then 12 months, same. Okay, so substantial period generally decided by the management. Management means management will ask you only, who are you? A chartered accountant. How will chartered accountant decide? Find out what is the operating cycle. That operating cycle gives you that if I drop the money today into the business will hit back the money to me after 8 months. So my revenue, if I invest today, the revenue would come back to me in the cash form after how many months? 8 months. So my revenue generating capacity of my cash is how many months? 8 months. So my substantial period is 8 months. So if any asset takes more than 8 months to be in ready to use condition, that means it is an asset and not an expenditure. Correct. Am I clear? Now, so you understood starting. Starting date is what? Later of loan taken, active development started, or expenses incurred on the loan. End date is loan repaid or asset is in ready to use, whichever is earlier. Over here it is whichever is later. Over here whichever is earlier. If the asset is constructed in by parts and each part is capable of independent use, then borrowing cost should be stopped on the part which is ready to be in use condition. Then the remaining borrowing cost should be capitalized to those work in progress wala asset. I give you 5 floors mein complete ho raha tha. First floor ready, stop. Borrowing cost attributable to 4. Second floor ready, borrowing cost attributable to now 3 only, not these 2. Correct? Now, suspense. When your construction was stopped during that period, borrowing cost should be capitalized, should not be capitalized. It should be capitalized only if the construction was stopped due to unavoidable reasons. Unavoidable reasons means those reasons which is not within the control of the entity. Then you can continue capitalizing. But it was avoidable negligence, then you should stop capitalization during those suspension period. Am I clear? Yes. Now chartered, the major stress of this standard is, and borrowing cost should be, if it is incurred on qualifying asset, then it should be capitalized, else it should be transferred to P&L. Now, so whenever we say borrowing cost, basically we are trying to say borrowing cost means that interest cost which is capitalized. Whenever we are saying borrowing cost, we are basically trying to say borrowing cost, that interest cost which is capitalized. Now, how to calculate borrowing cost? So we have bifurcated this calculation into three scenarios: foreign borrowing, Indian borrowing, group borrowings. Indian borrowings means there are two again: specific and general. Foreign borrowing, Indian borrowing, group borrowing. Let's go across foreign borrowing. Now, chartered foreign borrowing. First, let us understand. Suppose I have taken $1,000 का loan. I have taken $1,000 का loan. Correct? That time the exchange rate was 50 rupees. That time the exchange rate was 50. That means I have taken 50,000 का loan. Abroad में foreign rate is 5%, Indian rate is 12%. Correct? Now, at the end of the year, dollar became 60. So, understand this conversation. Correct? You are a person who has taken the loan and I am the standard. So, you told me, Dipesh, is $1,000 per 10 rupees is my loss because of dollar fluctuation, exchange rate difference. When I got the loan, it was 50,000, but at the end of the year, it is 60,000. So if I repay the loan, I don't have to repay only the interest, but I have to repay this 10 per dollar extra, that is 10,000 rupees extra. So ultimately, on this borrowing of 50,000, I am paying 5% of $1,000, that is $50 as interest. $50 into rate, that time year end my rate is how much? 60. So that 3,000 I am paying in INR as interest cost, plus I am paying extra 10,000. So I have borrowed 50, but I am repaying 63. So I should capitalize entire 13. Are you understanding your contention? You are saying $1,000 borrowed at rupees 50. So I borrowed 50,000. On this 1,000, I am supposed to pay 5% interest, that is $50. At the end of the year, dollar rate is 60. That means in INR, I am supposed to pay 3,000 interest. Since the dollar rate has gone up to 60, that means if I repay the loan, I don't have to repay 50,000, but I have to repay 60,000. I will give him $1,000. But now, at the time of repaying, $1,000 would cost me how much? 60. So I had taken 50, I am repaying 60. So extra how much I am repaying? 10,000. Interest 13. Let me capitalize entire 13,000, because if I have taken a loan of 15, I am repaying. If I am repaying 13, then entire 13 should be capitalized. I told relax. What I'll tell? I tell, first of all, tell me this borrowing cost ka 3,000 ka to no tension, I will allow you to capitalize. But tell me, hero, why did you go abroad and borrow only? Why didn't you borrow from India? Then you had a contention saying, sir, if I would have borrowed from India, the rate of interest would have been 12%. But since I borrowed from abroad, the rate of interest is 5%. Hence, to save interest, I went abroad. I said, fair enough. Now I am saying that from India, if you have taken a loan, you would have paid 12% of 50,000, that is 6,000 interest. Yes. Abroad, mein how much interest you are paying? Only 3,000. So since you had taken loan from abroad, how much interest did you save? 3,000. But how much is your exchange loss? 10,000. I can, since if you would have taken loan from India, I would have allowed you to capitalize 6. I would have allowed you to capitalize 6. That is my maximum capacity I can allow you to capitalize. That is my maximum capacity which I can allow you to capitalize. So, out of this 6,000, 3,000 is your original interest that you capitalize. Extra 3,000 from this 10,000 you can capitalize. Understood? Yes, sir. That means, chartered, what I am trying to say is, first we'll calculate the exchange loss. Exchange loss how much? 10,000. Then you will calculate interest on foreign borrowings. How much? 3,000. Then you will calculate interest if the loan was borrowed in India. That is 6. How much interest did you save? 6 minus 3. 3 you saved. So, sorry, out of 6, 3 is foreign borrowing ka interest. So, how much interest you saved if you have not, since you had not borrowed from India? 3. This out of 10,000 you can capitalize. Let's take another example. Suppose you take a loan of dollar 1,000 at the rate of rupees 70. Interest rate is 5%. If you would have borrowed from India, interest rate would have been, say, suppose 6% and say suppose 11%. Now the dollar rate has become 75. So you are saying, Dipesh sir, 5 into 1,000. Exchange loss $1,000 per 5 rupees I want to capitalize, that is 5,000 rupees. I said, wait. Why did you take loan from abroad? Because abroad mein interest is cheaper. Abroad mein how much interest you are paying? Abroad ka interest is $1,000 into 6%, that is 60. 60 into 75. Correct charted. 60 into 75 will 60 into 75 will come to 4,500. If you would have borrowed from India, your interest cost abroad ka is how much? 4,000. Fair enough. That means you want to capitalize 9,500. I am saying interest in India would have been how much? If you would have borrowed from India, it would have been 1,000 into 70. 70,000. On 70,000, I would have allowed you to capitalized 11%. So 11% of 70,000 is how much? 11% of 70,000 is 7,700. So I would have allowed you to capitalize 7,700, but you want to capitalize how much? 5,000. You can capitalize. But suppose exchange loss was, say, suppose I am saying 8,000. In India, I would have given you interest, 5,000. If you would have taken loan from abroad, then 7,700 would have been allowed, out of which 4,500 I am allowing. So how much did you save interest? 3,200. So I can allow you to extra capitalize 3,200 out of this 5,000. Correct? Okay, sir. Now let us see what I have done. Foreign borrowing. Foreign borrowing, exchange loss arising on foreign currency borrowings up to the savings in interest cost. If loan is exchange loss arising on foreign currency borrowings up to savings in interest cost if loan was borrowed in India is treated as borrowing cost to be capitalized as per Ind AS 23, and the remaining loss will be recognized in PL. This is the formula I have given. You can, and the journal entries. Correct. Now, इधर देखो, loan was and correct. So forex loss is there. A portion of forex loss will be allowed to be capitalized. Now look at this question. Loan was taken on 1/4/18. Loan was taken on 1/4/18 for how much? $5,000. $1 is equal to 70 rupees. Interest rate 6%. Similar loan in India can be raised at 10%. So you went abroad because the interest rate was cheaper. On 31st March 2019, after 1 year, interest on loan, this is IOL, interest on loan was paid for full year and the dollar rate became 78. Oh my God. So when you borrowed, it was 70, now it is 78. The exchange loss is how much? 8 rupees per dollar. $5,000 ka exchange loss is how much? Forex loss is 40,000. You want 40,000 to be capitalized. Now what I am saying, If you had taken loan in India, how much? $5,000 into 70, that is 3,50,000 ka loan you would have taken in India. Correct, at the rate of 10%. That means you would have taken at, your interest in India would have been 35,000. Actual interest on loan is how much? $5,000 into 6%, that is $300. $300 year end ka rate is 78. So $300 into 78 is 23,400. So 23,400 is the interest which you are paying abroad. If you are in India, you would have paid 35,000 interest. Since you are in abroad, you are paying only 23,400. So how much interest did you save? 11,600. So I will allow you to capitalize 40,000 or 11,600, whichever is lower. So 11,600 is total forex loss, capitalized whichever is lower, 11,600 for, and forex loss 28,400. Am I clear? This forex loss charted, this forex loss is transferred to P&L. Now check, I have taken a loan of, understand the journals, I have taken a loan of 3,50,000, exchange difference 40,000. Now, out of this 40,000 exchange difference, how much I am capitalizing? 11,600, balance is transferred to P&L. ED closed. Interest 23,400 which I have paid, and PPE to interest. So, this normal interest is also capitalized. So, I allow you to capitalize 11,600 and 23,400. So, total you capitalized is 40,000. Now, suppose sir first year mein forex gain is there. So, that will be transferred to P&L. If first year mein forex gain is there, then it will be transferred to P&L. But first year mein there is a loss, you did this drama. Second year mein there is a forex gain, then what you will do? You will be able to reverse as much you had capitalized. So suppose next year it is given. This is forex loss. Forex loss is 48, 11, forex loss is 11. Interest on loan 23, total is 35, which is capitalized. Correct? 11,600 is capitalized, and your interest in India 23,400 is also capitalized. So total you have capitalized is 35,000. Correct? Which is the maximum interest which you would have paid in India. Now, the standard says treatment of forex gain. Amount of forex gain on foreign currency loan. FC is foreign currency loan. This is your forex gain. Reversal of forex loss capitalized, maximum up to forex gain. For example, next year the dollar rate became how much? 72. So it fell by 6 rupees. It fell by 6 rupees charted. So forex gain is $5,000 per 30,000. How much you had capitalized? 11,600. That much you can reverse. Forex loss capitalized. That much forex gain may again you will reverse, and the balance will go to P&L. Now check. Foreign currency loan to exchange difference 30,000, 30,000. Out of this 30,000, you had earlier capitalized 11,600, which is reversed, and balance will go to P&L. So whatever you had capitalized, that can be reversed in future if there is a forex gain. Correct? Yes? No? Understood, chartered. Forex loss to be capitalized, forex loss or savings in interest, whichever is lower. So out of 40,000, 11,600 is capitalized, balance is forex loss. Total capitalized is 23,400 and 11,600. Correct. Total capitalized is forex loss 11, 23,400. Am I clear, chartered? Yes or no? Indian borrowings. Indian borrowings. So basically in foreign currency bond was, foreign currency loan was what we studied, forex loss. As much interest you saved by borrowing from abroad, that much interest can be allowed to be capitalized out of forex loss, balance loss, P&L. Whatever you have capitalized this year can be reversed in future in case of forex gain. Am I clear? Yes, sir. So the fundamental tha कि भाई, if you had taken loan from India, 5 rupees interest. Since you have taken loan from abroad, 2 rupees interest. So extra how much I can allow you to capitalize? 3 rupees out of your forex loss. This 3 rupees can be reversed if there is a forex gain in future. Correct? Indian borrowings can be of two types. One is specific borrowings, one is general borrowings. Specific borrowings, that means you have borrowed money specially for purchase, construction or production of qualifying asset. This is specific borrowings, general borrowings. This you understand very, very carefully. All general borrowings of the entity can be used for any purpose which may have been borrowed after or before expense on qualifying expense incurred. ये जो line है ना, this is a very prudent line which the what we are saying standard is talking about. For example, understand this one to one clearly. First is started. My mother wants jewelry. Correct? And I want to go abroad. Let's assume this is our qualifying asset. And this is not a qualifying asset for discussion purpose. Now I have taken a loan. Correct? This loan ka interest is, this loan is used for this purpose or this purpose. We don't know. Can I capitalize interest on this loan on this? Yes. That means the standard says you don't have to match loan and qualifying asset one to one. It can be used for any purpose. You have used this loan for any purpose. We don't know. It's not practically possible. I'll tell you why it is allowed. First is it is not practically possible. General borrowings ko you can allocate. Correct? So first is practical difficulty. Second difficulty, their logic is, if you are not going abroad, this loan would not have been taken. Hence, this loan, whether you have used it for jewelry or abroad, you can capitalize it for abroad since it is your qualifying asset. Understood? If you are not going abroad, this loan would not have been taken because sufficient money is there for mother's jewelry. So, if you have taken, so first you have taken loan, purchased mother's jewelry, then from your own money, you went abroad. It's one and the same. So, they are not saying loan taken, used it for abroad, or loan taken, used it for mother's jewelry ka money, used it for abroad. Doesn't matter. Loan can be used for any purpose. You can capitalize it. So, one-to-one matching is not required. Second chartered, you went abroad, money was spent. Money was spent on you from the money which the entity had. Then entity took a loan to buy the jewelry. Entity would not have taken loan to buy the jewelry if you had not gone abroad. And again I am telling you, you went abroad from the finances which the entity has. Correct? Then you took a loan. And with that loan you bought jewelry. Still interest on loan can be capitalized to this abroad wala studies. How? Sir, I have taken loan for jewelry. Relax. Money was used where? You are abroad. Correct? If you weren't going abroad, that money, say, jewelry would have come. Yes. Since you went abroad, I had to take loan to buy the jewelry. That means loan ka reason was abroad only. Are you? So again, it can be capitalized. Third chartered, you had taken the loan before, purchased the jewelry. Then you took a loan, purchased jewelry, then you went abroad. And abroad ka money was given to you. Then the standard says you took a loan, purchased jewelry. Sorry, you had money. With that money, you took a loan, purchased jewelry. Then you had money through which you went abroad. Yes. Still the loan interest can be capitalized. Listen to this very carefully. You took a loan, purchased jewelry. Then with your own money you went abroad. Then still interest on loan can be capitalized. Why? Because the standard believes if we are not going abroad, then that money could have been used to repay the loan. Oh, and this will come in a question, practical question, where institute has used this assumption and solved the sum. So understand chartered three things. First, you are not supposed to match 1 to 1. You have taken the loan for which you have used it, you don't know. You had money, enough money to do one thing, either jewelry or abroad. This is a qualifying asset, so your discussion is restricted on this. Now don't say, sir, interest loan can be capitalized on jewelry. We are not considering this as a qualifying asset only. Okay, so we are only capitalization part comes here. You have taken a loan, there is a jewelry, there is abroad. For which purpose you have used the loan, you don't know. Can you capitalize the interest? Yes, because you don't have to match 1 to 1. Second, you have taken a loan, purchased jewelry, you have taken a loan, purchased jewelry, then you went abroad with your home money. Then the standard says still interest can be capitalized. Loan was taken before you went abroad. Still it can be capitalized. Why? If you weren't going abroad, that money would have been used to repay the loan. So the loan is continuing because you went abroad. Okay. Third condition. You went abroad with your own money. Then you took a loan to buy jewelry. If you would have not gone abroad, there was a money left with which I could have bought jewelry. So I am taking loan again since you are going abroad. So whether the loan is taken before you going abroad or after going abroad, or whether you have used it for abroad or jewelry, does not make a difference. You can capitalize this. This is done for two reasons started. First, to avoid practical difficulty, because if this is not written in the standard, no, there is a fight. It is used, it is not used, it can be capitalized, not be capitalized. So they have made it very simple. There is a loan, there is a qualifying asset, capitalize it. You have taken before, you have taken after. If you have taken before and then loan is used somewhere else, but with entity's money you are constructing the asset. If that construction was not there, then that money you would have used in repaying the loan. You are not able to repay the loan. Why? Because you are constructing. That means again the loan is there because of the construction. You had the money, started the construction. Then you took the loan to buy the jewelry. Doesn't matter. After construction started, you purchased the jewelry. Doesn't matter. If the construction was not there, you need not take loan only. No? That entity's money could have been used for jewelry. Is that clear? So that is what this paragraph states, and this paragraph therefore becomes very, very important. Therefore, this paragraph becomes very, very important, chartered. All general borrowings of the entity can be used for any purpose which may have been borrowed after or before expenses on qualifying asset is incurred. Any, that means you don't have to match 1 to 1 before or after. If you have taken the loan before you going abroad, that means the extra money could have been used to repay the loan. Understood? It is always assumed that specific borrowings are used first. So we have got both the borrowings, specific borrowings, general borrowings. When we are calculating borrowing cost, first we will capitalize specific borrowings and then first we'll use specific borrowings, then we'll use general borrowings. That is common sense, and that you studied in inter also. This point is valid in inter also. But we don't go into inter wala part, because why? It is not there required in the question. But in final you will require this knowledge in question. Then you will understand, yes, at times when the student first hears this, they feel this is illogical. But when you solve the question and institute has used this assumption to solve the question, then you feel, yeah, it's logical. Specific borrowings are used first to incur expenses on qualifying asset, and then general borrowings are used for remaining expenses on qualifying expense. Expenses incurred should be considered on payment basis and not on accrual basis, obviously, because we are using the loan. So payment basis and not. All these points will be helpful while solving the question. So always consider expenses on accrual basis, expenses on payment basis, both are given, you will use payment. How to calculate borrowing cost to be capitalized? Specific borrowing. Now simple, how to calculate interest? I had learned in my childhood, you would have also learned that borrowing cost, interest is nothing but PTR by 100. Over here it is same thing. Amount into rate of interest into months. Amount means specific borrowings. Rate of interest means rate of interest on specific borrowings. Months means we are calculating borrowing cost for a specific year. So commencement date or year starting, whichever is later. Your commencement date is last year. You had taken a loan, commencement date, whichever is later. You remember whichever is later? Loan taken, construction started, expenses incurred. Whichever is later was 1st June 1990. That means this falls in the year 91. Correct, but you are calculating interest for 91, 92. So 91, 92 starts from 1491. So current year ka borrowing cost, if you are calculating, you will calculate from 1st June or 1/4. Sir, 1/4. That is why it is written commencement date or year starting, whichever is later. 2. Cessation date or year end, whichever is earlier. When you completed the construction or the year ended first, whichever is earlier. Correct, this is simple. Now chartered, suppose, as I told you, you took the loan and you took certain time period, chartered to use that money on the loan, on the construction. For that time period you invested. Am I clear? For that time period chartered you invested. Then in that time period, suppose you took a loan on 1490. Construction started on 1790. So this 3 months ke liye you have used the loan, invested somewhere, and this 3 months mein you earned interest. So whatever is the total borrowing cost, from that you subtract this 3 months ka interest, because this is a specific borrowing. Investment income on temporary investment of specific borrowing. So borrowing cost you will calculate like this. Year starts say year end minus for idle period where you invested. Am I clear? Yes, sir. So because this is a specific borrowing, this was borrowed just for the purpose, but 3 months you could not use that loan money in the construction. Correct. So what? Because since the years has started, so year starts say year end tak to you are calculating interest, but during this in between 3 months or year starts say out of 5 lakhs you could use only 1 lakh. So, but you are calculating interest on specific borrowings, entire amount. On 5 lakhs you are calculating interest. You are not calculating interest on money spent. You are calculating interest on amount borrowed. Understand this. Suppose you have taken a loan of 5 lakhs, specific borrowings. Out of this 5 lakhs, you used 1 lakh on 1490. Construction started on 179. You started using this money on 1890. Correct? Construction date of loan taken 1490. Construction started on 1790. So you'll start capitalizing from which date? 1890. Date of loan taken. Construction started, money started spending. But how much did you spend? 1 lakh. Will we calculate interest on this 1 lakh or 5 lakh? 5 lakh. Although you have used only 1 lakh. So interest is calculated on the borrowings and not on the amount spent. When you are checking the date, you check amount spent, date of loan taken, construction started, whichever is later. But you don't consider amount spent to calculate interest. You consider entire loan amount. So 1 lakh you started using, but 4 lakh you don't require now. So you have invested somewhere else. And on that 4 lakhs you earn interest. That interest should be subtracted. Common sense. If you had taken interest on 1 lakh only over here I am calculating interest on 5 lakhs. But if I was calculating interest only on 1 lakh, then I will not subtract this. I am calculating interest on 5 lakhs. But 1 lakh I am using, 4 lakhs I have invested. So 4 lakhs ka interest I am subtracting. Whatever interest you are earning. Logical or illogical? Logical. So 5 lakhs ka loan, sir. If I have spent 1 lakh, logically I should have calculated interest only on 1 lakh. Correct. But I have taken a 5 lakhs, I will calculate interest on entire 5 lakhs, although I have spent only 1 lakhs. Correct. 4 lakhs I have invested somewhere else. Correct. On that I am earning money. That I will subtract. Correct. So 5 lakh ka interest capitalized minus 4 lakh ka interest which I have received. Ultimately it will come 1 lakh ka. General borrowings. Now again the fundamental remains is the same. Amount, rate of interest, months by 12. Now chartered, let's understand amount, rate of interest and months over year. Now, how to calculate this months and all or amount? Now charted current year में, this is year 1. Year 1 में you spent cash rupees 1000, say 9000. You had certain materials in store, so material used from store is another 1000. That means total money spent is how much? 9000. Cash 9, non-cash 1. Now you will calculate interest on this 9000. Money spent 10%, 900. So total cost of construction 9900. Work in progress ka cost 900 is the cost, 900 is the interest capitalized. Correct, incorrect? So now what is the cost of the asset? 9900 when you start year 2. 9900 plus whatever you spend in cash over here plus whatever you spent on non-cash, that means whatever material was there in your go down which you used it over here. Sir, but why you are taking non-cash? You did not spend money. If I would not have used it here, I would have sold, got the money, repaid the loan. Shit. Or I would have used that raw material in constructing the goods. I would have constructed the goods, constructed the goods, sold the goods, recovered the money. That is why I said operating cycle should be substantial period as per management. Oh yes. So if you are using the raw material from your store, goods from the store, that goods, whether it, even if it is non-cash, will add it over here. Why? Because either you would have sold that 1000, got the money, you would have repaid the loan, or with that 1000 ka goods, you would have produced something, that produced goods you would have sold, got the money. For example, you are a furniture wala, you have got some wood in your go down, that wood you have used it here. 9000 ka wood you purchased, 1000 ka used, 1000 ka wood you used it from your go down. You are a furniture wala, you had some wood in your go down. 9000 ka wood you purchased, 1000 ka wood you used it from your go down. If that 1000 ka used goods you would have wood, if that 1000 ka wood, if you would have not used in construction of this furniture, then you would have sold this 1000 ka wood, got the money and repaid the loan. Or with this wood you would have created a furniture, sold the furniture and repaid the loan. Understood? That means if you would have used this in ultimate. Next year when I am calculating chartered, I will take 9900, because last year work in progress was how much? 9900. 9900 plus cash expenditure plus non-cash expenditure is the total cost of the asset. If that asset construction per is government giving subsidy, then you subtract that. And if you are construction this asset for somebody else, and if somebody else is giving you part payments or progress payments, that you will subtract, then that will become the amount spent out of loan. Am I clear? I repeat, current year mein cash expenditure 9000, material from store you used 1000, total money spent 10,000. On this 10,000 interest 10%, that is 1000. Total cost 11,000 work in progress in the current year. Next year ka opening balance of the asset is 11,000. Next year cash mein you spent 4. Material from store you spent 2. So total how much you have spent? 11 plus 4 plus 2. 11 you had spent last year. 4 plus 2, that is how much? 16. 18,000 minus government subsidy 1000. Government gave you money which you used to repay the loan, or you got progress payments if you are creating the asset for somebody else, part payment, say 2000. So 3000 you got it back which you used to repay the loan. So out of loan how much you are using it for construction? 15,000. So 15,000 per next year you will calculate interest. Am I clear? That is what it is written. Amount incurred on qualifying asset after using specific borrowings. Amount of loan spent on qualifying asset, including borrowing cost capitalized previous year. Add cash expenditure, add raw material used from the store, less progress payment received, less subsidy or government grant received. Capitalization. Since there are charted, since there are number of loans, you might have 3, 4. General borrowings can be more than one also. So rate should be capitalization rate. That capitalization rate is nothing but weighted average rate of all the borrowings. How to find out the weighted average rate? Capitalization rate, that is weighted average borrowing rate, is nothing but amount of interest on all borrowings in current year divided by total amount of general borrowings used divided by 12 months. Am I clear? If you are giving interest for 3 months, then you should take total also for borrowings also for 3 months only, no? So amount of interest on all general borrowings in current year, ठीक है, divided by total amount of general borrowings for months used by 12. Suppose general borrowings is 1 lakh. Rate of interest is 12%. You have used this for 9 months only. So numerator में you will take 9 months का interest 9,000. 1 lakh into 12%. 12,000 for the whole year. You have used this borrowing in current year only for 9 months. So 9,000. 1 lakh you have used it for how many months? 1 lakh is the loan. For full year, for 9 months it will become 9 by 12. Correct? So interest is for 9 months, then loan also should be for the proportionate period. Then you will get what? Then what you will get? Weighted average borrowing cost. So that means chartered, if you have got more than one borrowing, so you have got borrowing 1 lakh for 12% full year, 12,000. Another borrowing 2 lakh for 15% is equal to 30,000. Therefore total 3 lakh, 42,000 is the interest. So average interest will become, capitalization rate will become 42,000 interest on 3 lakh into 100, whatever rate of interest you get. Am I clear? Another way, suppose you had 1 lakh, 12% for 9 months plus 2 lakh, 15% for 10 months. This is the interest you paid. Then divide by also 1 lakh into 9 by 12 plus 2 lakh into 10 by 12. This, if you are taking interest for 9 months, take loan also for 9 months only. Whatever into 100, whatever rate you get, that is your capitalization rate. You understood? Yes or no? Now, chartered, over here, understand, commencement date, expenditure incurred date, year starting, whichever is later. Commencement date, expenditure incurred date or year starting, whichever is later, to cessation date or year ending, whichever is earlier. Same thing. Yes or no? Yes, sir. So this is how you calculate general borrowing interest. So amount which you have spent after exhausting general borrowings, amount spent, cash plus non-cash minus subsidy minus progress payment and interest of previous year. Correct? Rate of interest, capitalization rate, and then months by 12, commencement or year starting, whichever is later, cessation or year ending, whichever is earlier. That will give you general borrowing cost. General borrowing cost, specific borrowing cost. If you add, that will give you total actual interest on all general borrowings in current year. Amount to be capitalized lower of A or B. This is the actual interest cost which you are paying. And this is the actual interest cost which you are incurring. So incurred or paid, whichever is lower. Yes or no? If you have paid interest 5,000 but you have incurred interest 8,000, you will take borrowing cost to be capitalized 5,000. But you have paid 8 but you have incurred in the current year only 5, then you will take only 5. Understood? It should not exceed total borrowing cost for the period. If you are paying some outstanding in the current year, you will not consider that. Okay. The actual interest on all general borrowings in the current year into, we have calculated this or this, whichever is lower. Total borrowing cost to be capitalized, step 1 specific borrowings, step 2 general borrowings. If specific borrowings are for more than one asset, then allocate borrowing cost to all assets in the ratio of expenses incurred. That is simple. Correct? So this was your Indian borrowing as specific and general chartered. I hope you understood general. General may we were supposed to consider 3 factors. Amount, that is amount spent on qualifying asset after using specific loan. So you have spent suppose 2 lakhs. Out of that 2 lakhs, 1 lakh was out of specific borrowings. Then you remove it. So amount spent out of general borrowings is only 1 lakh. That you will take. Plus interest of previous year. Plus cash payment. Plus non-cash expenses. Minus government subsidy or grant. Minus progress payment receipt. Rate of interest capitalized. How to capitalize? Loan into rate of interest into months by 12 plus same thing, loan into months by 12 into 100, you will get capitalization rate. Period is state. Commencement, expenses incurred or year starting, whichever is later. 2. Cessation, year end, whichever is earlier. Here suppose total interest comes to 2,000 but you have paid 3,000, you will consider 2,000. But total interest you have calculated 2,000 but current year interest is coming to 1,500, then you will take 1,500. Am I clear? Because your total borrowing cost cannot exceed the actual borrowing cost for the current year. Correct? Now, what is the total borrowing cost to be capitalized? Specific borrowing cost plus general borrowing cost added. Understood? Yes or no? And it is stated that if specific borrowing cost is taken for more than one asset, it should be bifurcated. Yes or no? Yes. Group borrowings. Chartered group borrowings. Now understand group borrowings. That means capitalization of borrowing cost by group companies. Now understand. Borrowings outside the group. S1 constructed qualifying asset by contractor of S2. So S2 constructed asset for S1. S2 constructed asset for S1. Cost of construction 100. But S2 is charging 120. You will capitalize borrowing cost. So S1 qualifying asset is equal to 100 minus 20, profit eliminated, intercompany profit. So qualifying asset of S1 is how much? 100 rupees. S2 10% of 100 rupees. In separate financial statement of S1, no borrowing cost will be capitalized because loan was not taken by S1. S2 in separate financial S2, no borrowing cost to be capitalized because no qualifying asset. In corporate, in consolidated financial statement, you will capitalize borrowing cost of 10% on 100 rupees. Why? Because 100 rupees is the loan which has been taken by S2. So I am one subsidiary, you are another subsidiary. You are constructing an asset for me. You have taken loan from outside. Correct? First of all, my asset cost is 100 rupees, but you are constructing for me at 120. Your profit margin is 100. Fair enough. Intercompany profit eliminated. Rather, think, cost of construction 100 rupees, but you are charging from me 120. You have taken a loan of 100 rupees. 20 rupees is your profit. I will not capitalize any borrowing cost because I have not taken loan. You will not capitalize any borrowing cost because you have loan but no qualifying asset. But group as a whole has a qualifying asset also and has a loan also. Correct? Yes or no? So group will capitalize interest of 10 rupees, that is on 100 rupees. So in consolidated financial statements, borrowing cost capitalizes 10% of 100. Am I clear? S1 borrowed from SBI 9% and gave loan to S2 10%. S2 has a qualifying asset of 100 rupees. S1 took a loan, you gave the loan to me. You took it at 9%, you gave it to me at 10%. I have a qualifying asset. In my separate financial statement, I will capitalize at the rate of 10%. You will not capitalize only. In separate financial statement, no borrowing cost capitalized. In separate financial statement of S2, borrowing cost capitalized 10% of 100 because you give it to me at 10%. But in consolidated financial statement, capitalization rate should be 9%. Why? Because group borrowed it at 9%. Am I clear? You borrowed at 9. You gave it to me at 10. I will capitalize at 10. You will not capitalize only because you don't have a qualifying asset. Group has a qualifying asset also and loan. But group has a loan at the rate of 9%. So 9% per. But you are giving me a loan, internal loan and charging interest. Then chartered no capitalization. Am I clear? S1 gave loan to S2, no borrowing cost in CFS. Understood? So that is all for your borrowing cost. S1 to S2 loan, no. Outsider to S1 to S2. Outsider say 9%, S2 10%. He will capitalize at 10%. SFS में. Consolidated financial statement में 9%. Understood, chartered? So, borrowing cost में we understood what is borrowing cost, treatment of borrowing cost and calculation of borrowing cost. Calculation of borrowing cost में foreign borrowings, Indian borrowings of two types, general and specific, and group borrowings. Correct? What is borrowing cost and what to be done with borrowing cost? Qualifying asset, substantial period, normal substantial period, everything we have discussed comfortably. Believe me, all the practical question notes is covered over here and theoretical notes also covered over here, which will help you to solve both practical and theory if you remember all the points, and this point specifically if you get stuck in one or two questions. Rather, in the class we have done questions of institute where they have taken this assumption. There's a question in MTP also, there's a question in RTP also. Am I clear? Thank you so much. Take care. See you in the next video with next standard. Bye-bye.